Good afternoon everyone and welcome back to another instalment of the Zenfinex monthly forecast. Today I'm going to be analysing the GBPUSD market, which is continuing to be a story of two currencies performing well. However, it's going to boil down to how the fundamentals are stacking up against each other, as well as what we see on the chart. Over the last couple of months, this market has traded to the downside, but with April being historically a supportive month for the pound, I'm going to be going through the current themes at the moment and giving my opinion on whether this trend can stay true once more. Okay, so first of all, I wanted to touch on the sterling. Now, this currency has experienced some selling / profit taking over the last few weeks, mainly due to concerns around the AstraZeneca vaccine. Now, the UK is heavily dependent on this particular vaccine, which is why we've seen the effect that we have, especially in the last couple of weeks. Furthermore, we have seen numerous hedge funds scale back on their bullish positions in the pound. When a big player does this, not only does it have the effect due to the percentage of the market they possess, but it can cause like a chain reaction further down, going all the way down to retail traders. Now, when you list out these factors, it makes you think twice really about the bullish nature of the pound, but I'm not so sold on the selling narrative just yet. The vaccine rollout in the UK continues to be one of, if not the best in the world. We're seeing further easing of lockdown measures across the country, whilst other countries, especially in Europe, are struggling. Add this to the fact that April is historically a supportive month for the British pound. I'm treating the recent sell-in as a natural pullback fueled by profit taking due to an overextended market. Now, moving on to the remarkable comeback really of the dollar. This all boils down to the promising outlook we have in the US at the moment, one that very few predicted at the end of last year. The US as well as the UK are pumping out vaccines at a really impressive rate. Also, President Joe Biden outlined his plans for a $2.3 trillion infrastructure spending plan. More importantly though, each non-farm payroll day just seems to get better and better. We saw an increase of around 916,000 jobs last month, the largest gain since August last year. Unemployment dropped to 6%, down from 6.2%. It's going to be interesting to see if this month continues with more of the same in terms of the US dollar strength really and the Fed's reaction to what we're seeing in the markets. With both of these currencies really performing well, my overall bias will depend on what we see on the chart and whether we can hold on to some key levels, especially around 1.37, and I'll show you what I mean now. Okay, so I'm on the chart now and just wanted to quickly show you on the weekly chart what happened when we run into the highs of 2018. There was previous resistance. You can see this level at the moment run into it in around February, and since then we have been pulling back from there, and that ties in with the fact when I spoke about potentially the overextension at the moment of the pound, and it was natural that a pullback was going to happen, and we are in that territory at the moment. If I move these drawings and go down onto the daily chart, there's a really key level. I said at the end of the PowerPoint, it's going to depend really on whether we can hold on to a really key level, and that key level for me is this daily order block here. I think I may have mentioned this level before on a previous video, and the level still stands. We are on the daily chart, so this level is going back to the beginning of February. From this daily order block, I just want to quickly explain, we had this quite clear break of structure to the upside, run into these 2018 highs and pull back. Now, we run into the order block first of all at the end of March. When we did pull back from it, we failed to create a new higher high, and we actually run into, if I just draw that out for you as well, we actually run into again another order block, this time a bearish order block, and since then, I'm just trying to draw the picture for you, we've actually come down and we've created equal lows. Now, this is a very interesting level for me, because if we can hold this level and we can go up and we can break this high here, which is at around 1.39, then I'm going to expect price to continue Let me draw that for you. If price can run up and break this high here, I'm expecting a retest potentially of an order block that's left behind, and then we can move higher, and I'll be targeting these highs from 2018 once again, which I'll mark as our daily take profit for our bullish story. So that's what I want to see for the bullish story: a break of structure, a retest of an order block, and up into our daily take profit at around 1.42. Seems quite far away at the moment from where we are. Now the alternative to this is moving averages. Let's add both in. The 50-day moving average and the 200-day moving average. Okay, and we want to keep that order block in there. It's still a very key level. Now, for the bearish side of this story, this high would hold. This potential run up into this level here would hold, and from that level we could come down and break. So into that level we could come down and break this really key order block here, going down onto 1.35. We can break 1.35, a potential retest of an order block, and down to test, I think, the 200-day moving average at around, which will potentially be at around 1.3. Let me just draw that on. Daily take profit around 1.33. This for me would confirm bearish pricing. It would break out of this clear ascending channel that you see, and we could just continue to sell from there. So they're the two pictures I have at the moment. To find any positions on, if I remove all my drawings, if we're looking for more intraday positions, and I'm on the 4-hour chart now, so still relatively important. You can see again, we have broken structure down from this level, from this order block here. We went run down and broke these lows, but as you can see on the run up, we did actually break through this order block, potentially confirming bullish bias, because our run down from there created these equal lows. Created these equal lows, which I'm going to mark for you. Equal lows, and also has liquidity sitting below there as well, which could be taken. But for now, I'm focusing on the price action that we see at the moment. Now, what we had here, remove all my drawings again. We've actually had quite a nice break of structure from around this level, again holding it around 1.37. We run up and broke this structure. What I'd be looking for price to do is let me get the path up again, fall down into our order block, refine down on a lower time frame such as the 1 hour, where you can find a better risk reward ratio for a buy, a run up and break of these highs, which would confirm our bullish bias. So a run down into there, a break up to break these highs here, and then what I'd be looking for is a profit of around this level, 1.38, and if we were to get an entry from that level, and this is from the 4 hour, we can refine this further, look at around a 4.3 hour trade, which is quite nice. I haven't actually seen whether we can refine this level down a bit further, and the answer is yes, we can. Remove them. The level from the 4 hour order block can actually be refined down into this level, where we've had this bullish run and break of structure here, not quite there, BOS1, BOS2. We've had this run up from here. Now what I'm looking for is, if this high holds, then a run down into our 1 hour order block, and again buying from there. Other than that, guys, I will be waiting. It's still fairly early in the week. Not going to be rushing into any trades just yet. Going to see how this high holds, and I'll probably provide an update on it on my Instagram as well. So yeah, feel free to check that out. Thank you all for listening to this video as well. Please turn on your notifications or subscribe to this video, like it or share it, or place any comments. I'm happy to hear other people's opinions as well. Other than that, guys, I'll catch you all for the next video on Thursday. Take care.